Chip stocks are leading US equity futures higher, and the setup heading into the session looks broadly supportive for markets. Futures tied to the Nasdaq and the S&P 500 moved higher in recent trading, extending a winning streak built largely on strength in semiconductors. These are the companies that design and manufacture the processors powering computers, smartphones, and artificial intelligence systems. They have become some of the most closely watched stocks in the market this year, and for good reason. When investors feel good about growth, chip stocks tend to lead the way up. Right now, they are leading. The fuel behind the move is familiar. Expectations around artificial intelligence and data center expansion continue to draw buyers into the sector. Companies need enormous amounts of computing power to run AI systems, and that demand flows directly to chip makers. As long as those expectations hold, the sector has a clear growth story behind it, and investors are still buying into that story. On the energy side, Brent crude, the global oil benchmark, pulled back in the latest session. That matters beyond just the energy market. Lower oil prices tend to ease pressure on inflation, which has been one of the Federal Reserve's primary concerns as it weighs the timing of interest rate cuts. When crude falls, costs across the economy tend to follow. Transportation gets cheaper, manufacturing inputs cost less, and the overall inflation picture becomes a little easier to manage. Taken together, rising equity futures and softer oil prices represent a fairly constructive backdrop. There is another piece worth watching here: Treasury yields. Bond yields move in the opposite direction from bond prices. If investors grow more confident that inflation is cooling, they tend to buy bonds, which pushes yields lower. And lower yields can support stock valuations, particularly for growth-oriented sectors like technology. So the oil move and the yield picture are connected. That said, futures are a preview, not a guarantee. What happens before the opening bell does not always hold once actual trading begins. A fresh reading on jobs or inflation, or any unexpected headline, can shift the mood quickly. Markets have turned on less. The practical signal to watch today is whether chip stocks hold their gains through the full session. Early strength in semiconductors that fades by the close would be a different message than strength that builds. Pair that with where oil prices settle and what Treasury yields do through the day. Together, those three data points, chips, crude, and yields, will tell you more about the real tone of this market than the futures numbers alone. This briefing is brought to you by First Financial News. Clear, daily coverage of the economy and markets at firstfinancialnews.com.